TeraWulf describes themselves as a company that specializes in digital infrastructure and sustainable energy development. Their main focus is on supporting environmentally friendly Bitcoin mining operations by building and operating modern facilities in the United States. Accordingly, these facilities are powered by what is reported to be clean, affordable, and reliable energy sources, which TeraWulf states showcases their commitment to sustainability within the cryptocurrency mining industry. In just a few short minutes, we'll explore what TeraWulf is doing to differentiate itself from other crypto miners by exploring its operations and plans to adapt, as well as highlight general risks to crypto miners and specific concerns more applicable to this company itself. For starters, their primary source of revenue comes from mining Bitcoin at their sustainable mining facility sites. They occasionally provide miner hosting services to third parties for additional revenue. Their operations are designed for efficiency, continually expanding their hash rate to increase the chances of solving blocks and earning block rewards. Block rewards, which decrease periodically through halving events. Miners also earn transaction fees by validating transactions. TeraWulf liquidates its mined Bitcoin to acquire US dollars for operational expenses. They store their Bitcoin holdings in a cold storage wallet managed by NYDIG Trust Company LLC. Their mining operations utilize Foundry Digital LLC's third-party mining pool, and they sell their mined Bitcoin through NYDIG on a daily, weekly, and monthly basis. Bitcoin mining's reliance on energy consumption raises environmental concerns, particularly when fueled by fossil fuels. TeraWulf states their Bitcoin mining facilities utilize zero-carbon energy sources like nuclear and hydroelectric power. Since Bitcoin mining involves validating transactions through proof of work, where miners solve complex mathematical problems to add transactions to the blockchain, TeraWulf invests in computation networks with ASICs chips and ensures secure power supply for validation and maintaining the Bitcoin ledger. ASICs, application-specific integrated circuits, are primarily produced by a few manufacturers like Bitmain. In 2023, the company established WULF Compute as an innovation center for research and development of digital infrastructure. They committed a 2-megawatt power block at the Lake Mariner facility for a high-performance computing initiative, aiming to diversify revenue streams. Bitcoin mining operates in a mostly unregulated environment, but the company monitors public policy and engages with industry associations to advocate for measures that align with their objectives. Computing capacity, electricity costs, and location are crucial factors in mining operations. TeraWulf currently operates Bitcoin mining at 2 data centers, Lake Mariner facility in New York and Nautilus Crypto Mine facility in Pennsylvania. They have a total operational capacity of over 200 megawatts, with plans to have all of their mining operations to use zero-carbon energy, and they aim for complete reliance on such sources. The Lake Mariner facility draws power from Western New York's predominantly zero-carbon resources. It has an agreement with NYPA for 90 megawatts of power and helps balance the grid load with increasing renewable energy contributions. While the Nautilus Crypto Mine facility is powered by nuclear energy and has a 25% equity interest in Nautilus. In order to be competitive, TeraWulf aims to maintain one of the industry's lowest electricity costs and has a proprietary expansion pipeline with their existing facilities holding significant capacity for growth. The company also benefits from an experienced executive management team and Beowulf Electricity, ensuring efficient development and operation of their mining facilities. TeraWulf's primary competitors are other publicly traded Bitcoin miners such as Marathon Digital Holdings, Riot Platforms Inc., CleanSpark, Hut 8 Mining, Hive Blockchain Technologies, Bitfarms, Iris Energy Limited, Cipher Mining, and Bit Digital. However, TeraWulf believes that they have a competitive advantage due to their commitment to environmentally sustainable practices and favorable unit economics. The company acknowledges the potential for new miners during periods of increasing Bitcoin prices, but expects less efficient miners may struggle during price declines. Then, although TeraWulf uses specialized hardware and software for its Bitcoin mining operations, they follow open-source license agreements when using such components. Currently, they don't hold or plan to pursue patents for their blockchain operations, but rely on trade secrets, trademarks, and copyrights for protection. In the future, they may develop proprietary software for enhancing their operations. In general, the entry of more companies into the industry and the increasing global network hash rate pushes miners to keep acquiring new, more powerful machines to stay competitive. The production of these advanced miners is limited, causing prices to rise due to increased demand. If a miner cannot acquire enough new miners or secure funding, they could fall behind the curve. This is because a Bitcoin miner's likelihood of earning rewards is tied to their hash rate, which represents the computing power dedicated to supporting the Bitcoin blockchain. Other issues affecting TeraWulf and its peers in the crypto mining industry relate to the ongoing global supply chain crisis and increased demand for computer chips, which have resulted in a shortage of semiconductors, causing challenges for the production of miners used in Bitcoin mining operations. These miners are highly specialized servers built around ASIC chips that are difficult to produce in sufficient scale and quality. The cost to produce these miners has increased due to the supply chain crisis, and manufacturers have passed on higher costs to buyers like TeraWulf. Until the crisis is resolved, higher than usual costs for obtaining and deploying new miners could remain the norm. Furthermore, Bitcoin mining operations depend largely on the volatile price of Bitcoin, which could be impacted by negative publicity from financially struggling cryptocurrency companies. Additionally, future revenue may decrease due to Bitcoin halvings and reduced transaction fees, potentially decreasing demand for Bitcoin. Furthermore, the scalability issues facing Bitcoin could lead to high fees or slow transaction settlement times, affecting the operations of miners. Now, since TERAWULF's mining operations are specifically designed for Bitcoin, they may be negatively impacted by a sustained decline in its value or the introduction of competing blockchain platforms. Their miners use specialized ASICs optimized for mining Bitcoin using the SHA-256 algorithm, limiting their adaptability to other uses if such an event occurs. In regards to the expansion of the Lake Mariner facility or the Nautilus crypto mine facility, there are potential risks associated with expanding existing mining facilities, such as delays in construction, lack of availability or increased prices for parts and labor, disputes causing work stoppages, unanticipated environmental issues, permitting delays, and site readiness problems. The success of these projects depends on the skill of personnel involved, and any issues faced by key designers, contractors, or suppliers could lead to significant delays or cost increases. TERAWULF also acknowledges the operation and expansion of the Nautilus crypto mine facility is subject to the terms of a joint venture agreement, meaning TERAWULF may have less control over strategic decisions. Since TERAWULF entered into a second amended and restated joint venture agreement with an affiliate of Talon, where major decisions are made by a majority vote of the board of managers, which consists of one manager appointed by Thales, TERAWULF, and 4 managers appointed by Talon. Any significant disagreements or inability of Talon's affiliate to meet obligations could impact TERAWULF's control over the ongoing operation and future expansion of the facility. Critics also tend to point out the company may fail to comply with the terms and restrictions outlined in their Loan, Guarantee, and Security Agreement, LGSA. If this happens, the lenders can demand payment of all outstanding amounts and seize their collateral. The LGSA contains several provisions that could limit the company's flexibility in managing various aspects such as asset disposal, additional debt, dividend payments, investments, loans or advances, acquisitions, mergers, consolidations, and affiliate transactions. Any failure to meet these restrictions or make timely payments could have severe consequences on their financial condition or result in a default under the LGSA, allowing lenders to accelerate the debt maturity and seize collateral as compensation. Over to the topic of third parties. TERAWULF relies on third-party miners, particularly Bitmain miners, which may expose their operations to risks such as design flaws affecting the performance and reliability of their mining system. Such issues could lead to significant delays or even system failure, potentially resulting in financial losses, a drop in stock value, and reputational damage. Any exploitable weaknesses in the currently used Bitmain miners could impact a majority of their miner fleet, highlighting the need for continuous monitoring and improvement in their mining technology. The use of a third-party mining pool operator, Foundry, exposes TERAWULF to certain risks. These include potential downtime due to cyber attacks or other issues that could impact their ability to mine and receive revenue, discrepancies in the recording of each miner's contribution to the pool's overall hash rate, and dependence on the accuracy of Foundry's record-keeping for reward distribution. If they are unable to consistently obtain accurate proportionate rewards from their mining pool operator, it may affect the predictability of their mining returns. Furthermore, if Foundry were to cease operations or file for bankruptcy, there could be delays or unrecoverable losses in obtaining any unpaid mining rewards. In terms of digital asset protection, TERAWULF notes, quote, digital assets held by the company are not subject to FDIC or SIPC protections. The company does not hold its digital assets with a banking institution or a member of the Federal Deposit Insurance Corporation, FDIC, or the Securities Investor Protection Corporation, SIPC, and therefore its digital assets are not subject to the protections enjoyed by depositors with FDIC or SIPC member institutions, end quote. When it comes to governmental regulation and enforcement that TERAWULF faces, there is changing environmental regulation and public energy policy, which may expose their business to new risks, impacting their operations and profitability. New regulations or modifications could result in additional costs and difficulty adapting their planned business. A lack of consistent climate legislation creates economic and regulatory uncertainty for the company. Surveys and other regulatory actions could increase their operating cost or make it more challenging to continue current operations. The unpredictability around the impact of climate change and energy disclosure use regulation makes it difficult to predict how future legislation will affect financial conditions. However, since they are almost a completely zero-carbon Bitcoin miner, they believe they are advantageously positioned compared to competitors in this regard. For more on TERAWULF and other companies, follow Ascencore. Thanks for watching and have a nice day.